Australia's banks are preparing to bail in retail bank deposits. Martin North, John Adams, in the interest of the people. Hello, John.
Hello, sir.
How are you going?
Very good.
So, part 3.
Yes, we are here to talk about part 3 of our 3-part bail-in series, and this is perhaps, Martin, the most important part of what we've been discussing. So just to recap for the audience, we talked about deposit insurance in part 1. Part 2, we talked about the difference between bail-in and the deposit insurance scheme and how those two different elements interact. And now we're going to talk about the risk of bail-in. Here's where when we get called conspiracy theorists by pushing this, we're going to present today some very solid evidence. So in 2019, we had HSBC. They did some dramatic things with their changing their terms and conditions for their main retail deposit account. And we're going to actually talk about what they did and why that's significant. And then we're going to start having a broader conversation about the big 4 banks, because there was some significant changes in 3 of the big 4. And then there were also some second tier banks like Bank of Queensland and some of the credit unions of the world. Massive changes to terms and conditions last year.
So I think, John, your advice would be read those terms and conditions and really read them so you actually understand the implications and then plan accordingly.
Because you are, in effect, have given a loan to the bank, and this is something you and I have said consistently, that by you putting your money in the bank, the bank is not a custodian of your money. You have given the loan to a bank. So if you don't want to give the loan to a bank, if you don't want to be subject to the risks that are in your commercial contract, there are some options in front of you. But before you make any conclusive financial decisions, you have to understand the risks that's associated with your current arrangement. And 95 to 99% of Australians haven't thought through their current position, and that's the purpose of our 3-part series, but also to talk about these terms and conditions is to give people a more clearer picture as to what is the real state of affairs in this country. And
it's worth saying, John, isn't it, in closing, there are other options, but all of those options have other types of risks, because
yes,
there is no risk-free alternative out there in terms of holding on to your cash.
Precisely, yes. So everything has risk.
Yep.
What I would say is that some options have a higher degree of risk than in terms of others. But when the government says that there is no risk around banks, around bail-in, around negative interest rates, and cash and all of this sort of stuff, there are significant risks, and part of what we've been trying to achieve for a year and a half, or nearly 2 years, is to unveil draw back the curtain and actually show people that the Wizard of Oz is really a little fat little man, on a big megaphone.
Interesting thought. Could that be the RBA chair? John, thank you for your time today.
Thank you.
Martin North, John Adams, Interested People. We'll see you next time.